Hello, and welcome to Global ChartWatch, the place where we break down technical indicators, explain real chart setups, and help you trade smarter, with a clear edge. In today's video, we're going to dive deep into a powerful and clean reversal indicator, one that uses RSI, candle confirmation, and multi-time frame EMA filtering to generate smart buy and sell signals. And yes, it's all powered by PineScript on TradingView. So, grab your coffee, settle in, and let's go through this system, step by step. This custom reversal indicator is built around a very practical logic, white check mark emoji. First, we look for RSI-based overbought or oversold conditions. Not just randomly, we wait for RSI to move into those critical zones. When RSI crosses above 70, we know the market may be overbought. When it drops below 30, we look for oversold exhaustion, white check mark emoji. Second, we add candle confirmation. Not just one candle, but a clear reversal in momentum. We're looking for patterns like bullish engulfing, hammer candles, strong rejection wicks, something that visibly tells us momentum is shifting, white check mark emoji. And third, we filter all trades using a higher time frame EMA. Why? Because we don't want to fight the broader trend. If price is below the 200 EMA on the 4-hour chart, do you really want to go long on a 5-minute bounce? Probably not. The goal here? Reversals that often happen after exhaustion, when the market is tired and ready to snap back. This isn't just buy low, sell high. It's smarter than that. It's more like buy when price is oversold, shows reversal candles, and is still trading below the higher time frame EMA. We start with a classic RSI, Relative Strength Index, set to a length of 14. RSI gives us an idea of momentum, how strong the move is, how much energy the market really has. Now, in this script, we define two key zones. White check mark emoji, overbought, when RSI rises above 70. White check mark emoji, oversold, when RSI drops below 30. This creates two powerful signals. If RSI falls below 30, we consider the market oversold, and price might be getting ready to bounce. If RSI climbs above 70, it's considered overbought, and a potential pullback could be near. But here's the thing. RSI alone is not enough. It can show conditions, but not confirmation. And that's where the next step comes in, candle confirmation. We'll look at that right after this. Let's say RSI drops below 30. Price is oversold. But we don't want to blindly buy. We wait for confirmation. Candle confirmation. Specifically, we want to see a bullish candle, one where the close is above the open. That tells us buyers are stepping in. Even better? The current candle closes above the previous candle's open. That shows a clear shift in momentum. From sellers to buyers. This creates a strong, short-term reversal signal. Not just based on RSI, but with price action as confirmation. Now let's flip it. Let's say RSI is above 70. Price is overbought. We don't just sell, we look for a bearish candle. One that closes below the previous candle's open, showing weakness, and a potential move lower. This is where RSI and candlesticks work together. One shows exhaustion. The other shows reaction. When they line up, that's where opportunity lies. Now this is where things get smart. We use an exponential moving average, EMA, calculated from a higher time frame, for example, 1 hour, 60 minutes. This gives us the bigger picture trend. If we're trading on 5 minutes or 15 minutes, we want to know if we're buying into strength or fighting the trend. So the rule is, only consider buy signals when price is below the higher time frame EMA. Only take sell signals when price is above it. Wait, that's the opposite of trend following, right? Exactly, it's reversal logic. We assume price is stretched and due to snap back toward the mean. Let's walk through the logic of a buy setup. RSI is below 30 oversold. A strong bullish candle appears. Prices below the EMA from higher time frame. When these all align, we plot a green triangle below the bar equals buy signal. Now the sell setup. RSI above 70 overbought. Bearish confirmation candle. Prices above EMA, from 1H chart when this happens red triangle appears equals sell signal. These signals can help catch major tops and bottoms, but they work best on volatile assets. No indicator is perfect. And this one is no exception. It works best in volatile, ranging, or mean reverting markets, when price tends to bounce between levels. But it will give false signals during strong trends, especially if you ignore the EMA filter. That's why we always recommend using a stop loss and proper risk management. We'll go deeper into that in another video. Now, what if you want to take this system to the next level? You absolutely can. White check mark emoji, add volume confirmation, is the bounce supported by actual buying pressure? White check mark emoji, add RSI divergence, is momentum slowing down, even as price pushes higher? White check mark emoji, use adaptive EMAs that adjust to volatility in real time. White check mark emoji, filter signals by trading session, maybe you only want setups during London or New York hours. To wrap this up, if you really want the edge, combine this indicator with market structure. Look at support, resistance, and trend lines. Don't rely on indicators alone, always understand the story the chart is telling. And if you're new, don't worry. We'll break it all down, step by step, in the next tutorials. This is just the beginning. Let's keep learning and keep growing together.